Let's get a deep dive into the rest of this market action with our reporters. I want to start with you, Mike. What are you watching?
I'm watching the Bloomberg agricultural subindex. Now, a rebound in agricultural commodities over the summer is basically completely faded. And that leaves this Bloomberg agricultural subindex near the lowest it's been in 47 years. As the chart shows, as a gauge of inflation, this tracks very well with 10-year bond yields. And it's very heavily weighted to corn and soybeans. So obviously, the trade tension with China that cut exports is hurting crop prices to some degree. But there's another policy that's affecting demand for corn, and that's the EPA earlier this month decided to give 31 refineries exemption from annual biofuel blending requirements. This is causing a lot of tension within the White House. It's pitting the Energy Department and the EPA against the agricultural sector of the economy. And Bloomberg is reporting there was a meeting today to try to figure out ways to boost ethanol demand. But Abigail, it's not clear that any of these measures will actually be taken in force.
Well, Mike, with stocks trading lower on the day, it's not surprising that it was a risk-off day. And we can confirm this when we go cross-asset class and we see that bond futures were higher, along with gold futures and Japanese yen futures also higher. But what might be surprising is the fact that havens are doing much better than stocks in the third quarter to date. What we're looking at is a quarter-to-date chart here in the Bloomberg. In purple, we have the S&P 500 down 2.3%. In white, we have the yen futures. Those are the yen versus the dollar futures, so they are rising. Gold also rising, up 8.4%, the big winner. Treasuries higher as well, Renita. So the third quarter right now shaping up to be a risk-off quarter. It's going to be interesting to see what the month of September brings, of course.
Abigail, you mentioned gold, and I just want to give people a little bit more perspective on that. It's risen close to 1% during the day, and it's back above that $1,500 an ounce level, which technical analysts interpret as a bullish signal. Now, it is recouping more than a third of what it lost on Monday as risk appetite, just as you say, Abigail, wanes a little bit. Investors are worried about monetary policy ahead of Fed Chair Jay Powell's keynote speech in Jackson Hole. And what's also boosting gold are bond yields, which typically help non-interest bearing assets like gold.